some things that happen, obviously, have pushed that stock into the stratosphere, much to your consternation. Now, I'm sure, Gordon. I mean, you did increase deliveries 50% last year, forecasting 30 to 40% growth for 2020, despite the pandemic. You know, profitability, I know that there's a lot that goes into what we call profitability for Tesla, but that excited a lot of people, and obviously the stock has performed better than just about any other stock. So do you think there's a day of reckoning coming?
Right, but Joe, you got to be careful with just looking at stock price, right? If you look at their guidance, previously they said they were going to do over 500,000 cars. Last night, if you look at the midpoint, it was 495. So they actually cut their guidance last night. And with respect to stock price, look, you saw Nikola, right? They had a truck rolling down a hill that didn't have an engine. How is that different from what Tesla did years ago when they showed solar panels that didn't work on a house that was on the set of Desperate Housewives to sell the $2 billion acquisition of Solar City? Listen, Tesla's revenues, as you know, peaked essentially in the fourth quarter of 18. Their margins peaked in the third quarter of 18. And while people compare Tesla to Amazon, it's not Amazon. Tesla's more like AOL or BlackBerry. There's 46 new EVs hitting the market next year, 8 of which are coming from VW. And if you look at what VW said with respect to 300 gigawatt hours per year of battery capacity, that works out to about 4 million EVs they're planning to push out over the next 2 to 3 years. So I think that what Musk did last night essentially was push out the production of his batteries. And I think the issue is all the big boys, Ford, GM, VW, they've essentially brought out battery capacity. There is no capacity left. So Tesla effectively has to do it on its own. But if you look at their R&D as a percent of revenue, it's dropped from roughly 16% in 2016 to 4% today. So they're not even investing. So when you look at his missed promises and you look at the fact they're not investing, I think you have to be very skeptical with respect to his projections. And I think next year they go back into losses as that credit revenue falls.
So in terms of the forecast for batteries, you don't believe what Elon says he's going to be able to do in terms of what the battery will be capable of, or the number that they're going to be able to either buy from existing suppliers, or they want to do it on their own. They got some pretty aggressive plans, but it has been pushed out a little bit. You think those are all? You don't think those are realistic projections that Mr. Musk is making? You don't expect those to come true either?
Well, listen, it's not about what I expect. There's math you can do, right? They said 65 gigawatt hours per year. That's what they're looking to get to. That would require roughly an $8 billion investment on top of the Cybertruck, on top of the Gigafactory in Texas, on top of the factory in Germany. So they need to raise billions of more dollars to get to these goals, and they need to invest significantly in R&D, which they're not doing. Listen, the problem for Tesla is there's massive competition coming next year. You know, this reminds me of the movie Ford versus Ferrari. You remember Ford got really upset with Ferrari at the Le Mans race because they said, we're the best auto manufacturer in the world. Every auto company in the world is coming for Tesla's neck. 46 new EVs coming in 2021.
But Gordon, the move in the stock gives them, I mean, in terms of raising capital, they're in a much better position to do this than their competitors, given what the stock has done.
Right, but you also have to consider, right, they need to start showing growth. They're valued at a multiple of VW, despite the fact they're targeting 495,000 cars sold this year. VW sold 11 million cars. So they have to show significant growth. And we think that, given what he said last night, we think their deliveries are actually going to be down in 2021 because they just don't have the battery capacity to hit what they need to hit, and everybody else is sucking up all the capacity in the industry. So I think when people see that, I think people are going to be far less willing to give Tesla infinite amounts of money.
I wonder, you'll disappoint me if I ask you about that Tesla Plaid 0 to 60 in less than 2 seconds. If you tell me that's not going to work, then you've popped my bubble all around. Andrew, you got a question for Gordon?
Gordon, I just want to put a fine point on something. Gordon, you're suggesting that next year for Tesla that they're going to have supply problems? That's the problem? Meaning there's going to be so much demand for this car and their problem is going to be supply?
No. I think the problem is demand and competition. I think Tesla's deliveries.
Well, no. But hold on. You just said, just hear me out for a second, Gordon. Sure. You just said a moment ago, you said everybody else is sucking up the battery supply. They won't be able to have enough batteries. And so if they don't have enough batteries, that's a supply problem. That's not a demand problem.
Right. No. What I meant by that is they're not going to be able to expand their capacity. Listen, the reality is they were roughly 70% utilized if you look at their 2Q shipments versus what they said their capacity is. So they're not even selling out their current capacity, despite the fact that they're ramping a 500,000 car per year facility in Germany and a multi-100,000 car facility in the U.S. There's not enough demand for their existing capacity. So the issue is not supply. They're not demand constrained or supply constrained. It's a demand problem, and it's competition next year that's really going to hurt them. The ID3, VW's ID3, which just launched in Netherlands, Norway, Spain last month, as of yesterday, has outsold the Model 3 in its first month. That's a big problem for Tesla. ID4 coming in the fourth quarter.